Good afternoon. Welcome to the Fontenelle Final Bell here on the Rural Radio Network. I'm Susan Littlefield. A variety of things we're going to look at when it comes to the markets today, and with Brad Koima joining us with Koima and Barlick out of Sioux Center, Iowa. You know, we're going to talk cattle and a lot of discussion as what's been happening with the cash, the box beef, exports. We'll look at maybe some possibilities, some undervalued when it comes to the deferreds. And to start out, though, Brad, we're going to look at JBS because we know it made some news as the weekend kind of took full swing. There were some people that walked out of JBS there in Colorado wanting more money.
Right, and that seems to be, it's an issue of money rather than another outbreak of COVID-19, which I guess that's good, right? I mean, it's better than that. I understand that Friday afternoon there was a walkout. Some of the same personalities that initiated the first walkout a couple of months ago was also the initiating force here. So they lost their Saturday kill. They are killing today. I'm not sure that they're getting 100% of what they would like to typically do, but they are killing today. So I think it's well documented that of the big four, maybe the slowest to respond with economic incentive to their help is JBS. I know there are other packers that are using some kind of incentive program based on whether you show up to work, that there's an automatic bonus. So I'm hoping that we can overcome that. There is also some issues at a Tyson plant in Amarillo, which they tell me is over similar things, that it isn't that there's a whole bunch of people sick, but rather it's complaining maybe about working conditions or maybe about not enough compensation or something like that too. So I know that Amarillo Tyson plant has been a little less than that full capacity here for a few days. So we do need to keep an eye on that. We need every shackle space we can to get caught up.
Oh, very much so. We saw some decent cash sales last week. Is it in part because we came off of that holiday weekend?
You know, maybe. I think we came through a deal where we found out we've had pretty good restock, reorder, a business on some of this beef trade, particularly in the domestic market. While I think that the boxes may still be a little vulnerable here, and some of that's mostly because of the calendar, they have not been the flat out puke that it had been for a while, right? So, stabilizing in that 205 range. We might dip below 200 for a little while, but I was encouraged. I sold the cattle the highest I've sold them in 3 or 4 weeks last week. Not that that's such a runaway, but $1.60 in the meat. And the South was a little firmer at 95 to 6 on a few cattle. Of course, I'd like to be a glass half full. This has been such a nightmare for the producer here. The other thing, I wondered whether this is a factor or not, but I keep track of the formula prices and then the cash prices. Mostly I do that because I'm a big proponent of a mandate that makes the packer have to buy more negotiated cash cattle. And so I like to keep very close tabs on the formula values versus the dressed or the cash value. And for the first time, I believe in 8 weeks, they're about the same this week. The data just came in here a few minutes before you and I came on. I'm wondering, you don't suppose maybe we're getting through some of that slug of those formulas, because that's where they all are in Texas and Kansas, of course. So we'll have to monitor that for another week or two and see if that really is the case. I know that there's still some cattle backed up. I just would like to think we're making some progress.
That's good news for the cattle producer, knowing that we're finally not seeing all those extras sitting in the feedlots waiting to go.
Well, yeah, and I guess I want to be careful to understand that it's not like all roses and daisies yet in Texas and Kansas. I think we've made a significant progress though in Iowa and Nebraska, and I think there's other industry experts that would agree with me. I spent a couple of off and on a couple of last 3 days polling some of the Nebraska feedlots that I am familiar with. Normally this is the time of year, of course, where we would see a smaller census at these feed yards because of the seasonality selling calves, but almost to a person, the several feedlots I talked to all said that they have more empty pens than they typically do, even though they would typically have some, that they have more than they usually do. So I think the feeling is that the North is in okay shape, normal shape. Now we just gotta, we gotta get through this slug here of backed up cattle that they have in the South.
So having empty pens, does that make you nervous as you look at the long term of not having cattle in those feedlots right now?
Well, Yeah, I don't know if I'd use nervous as the word. It gives me a little hope, right?
Okay.
Um, Placements are a curious thing, and analysts are, and I'm probably guilty of making some of these glib type comments. Last time I checked, a cow generally has one calf, right? And that calf will generally go on feed, whether it goes on feed in October, or if it becomes a yearling and goes on feed the following August, or goes to a grow yard, goes to yada yada. The point I'm trying to make is this calf's going to get handled any number of different ways, and so it's going to affect when they go to the market, right? If it stays on grass longer, growing 2 pounds a day, 2.5 pounds a day, instead of going to a feedlot where it's going to go 3.25, 3.5. I get all that. I'm a feeder. So what you had in February, March, and April, you had a huge drop in the placements, over 800,000 cattle year-on-year difference. 800,000 cattle difference placements, February, March, and April. So, does that shortfall of the placements, where does that overlap with the carryover of some people think 1 million, some people think a little more than that. I'd say a little less than 1 million. Where does that overlap with each other then and go, oh, hey, all of a sudden we're in a little better shape, right? So, if I had to throw a dart, someplace after Labor Day, it would be my target, maybe into October. Actually the deferred cattle, I actually have a fair amount of enthusiasm for. I think the economy appears to be, coming back decently. I think demand has shown that it's okay. If we get back to some kind of normal supply deal, there's no reason we have to stay at 95 cents to $1 for cattle. We should get back to something that's more seasonally normal.
All right, well, stick around, folks. When we come back, we're going to continue to talk about what we're seeing in these cattle in the hog market as well, as we'll look at how wet it was the last couple of days and its effects on the grain market. It's the Fontenelle Final Bell on the Rural Radio Network. Welcome back to the Fontenelle Final Bell here on the Rural Radio Network. I'm Susan Littlefield as we continue our conversation this afternoon with Brad Koima of Koima and Varlick. We talked about where we were at cash-wise. Makes me think about the box beef, and I know you and I talked about this before we started this show, is we've seen some slippage. And you think that's going to continue into this week?
I would say likely we'll lose a little more ground on the boxes, and I want to be careful that people don't misunderstand that I'm, sending out a sympathy call to the packers. Even if the boxes get to 190, I mean, that would still support a $1.15, 20 market, cash market, and they'd still have some room to have some profits. But no, it's the summer doldrums, right? This is very normal. You get after Father's Day, and typically the beef features switch away from steaks, etc., to more a grinding meat type of deal. Now, as we approach Labor Day, that's when we'll start to get a little more of a beef feature again. So yeah, we've got kind of 4 to 6 weeks here where we got to chop wood with kind of a sloppy box beef market. But I don't think that that's a reason to necessarily be bearish from the price level that we're at.
The deferred cattle you talked about being undervalued. What are your thoughts on that and what it's going to mean in the near term and long term?
Well, you're starting to see the market tilt a little bit again today, where the deferreds were okay. Some of the months were even higher as compared to like the front end of the market. There's a couple of things about the deferreds. One, first of all, fundamental, and I think fundamentally I would look at the back months and say, well, eventually we're going to hopefully get beyond COVID-19. We're going to get to the point where we're used to this new normal. We're going to get restaurants open to a certain fashion. We're going to return our export business to where it used to be. And we're going to, not sweat every time we hear about a Greeley or an Amarillo, right? We're going to assume that we can get kill capacity done at a relatively normal level. Well, then if you're looking at a $1.10 market in the deferreds, where for the last, 5 Februarys, we've gone to $1.25 to $1.30, why wouldn't we at least put a little value on the $1.10? I actually believe fundamentally also that the part of the cattle cycle that you're on, where you saw tremendous female slaughter for 2 consecutive years, both heifers and cows, unusual heifer slaughter up 8% one year, up 6% the other year, that you've rounded the bend, as it were. And now we're going to go into a few less fed cattle because of the less fed heifers. So, I can spin it fundamentally that way. Also, the other, non-fundamental factor would be is if you're a fund trader, and there's plenty of them, and they're important to the market, and they've been completely absent. Open interest is at a near record low for the last few years here on the cow. They don't like to play in a market that has this much uncertainty. They don't like the idea of an uncertain economy, of an uncertain ability to harvest animals on a timely fashion, and so they're largely missing. Now, if the market starts to get back to normal, like if we would close above the May highs, and we were trading there on October and December today, if we would close there, I think you'd start to get the funds to come in. Now, the funds are not going to buy August. They're going to buy deferreds. So that's another reason why I have a little enthusiasm for the back end of the market.
What are we seeing export-wise? I know this isn't the normal time that we're talking about big export numbers. Not too good for cattle. Are we seeing some decent opportunities for hogs?
Certainly no runaway in the cattle. Decent on the hogs. A couple of weeks ago, it was quite good. Last week at 30 was, give it a B minus, decent enough. But we continue to have steady business to the main culprits, are the main people that we want to do business with, and that's China. So I think that the demand side of the market on the hogs is okay. The struggle we've got here is we've got the same ridiculous backlog, and it might be worse on the hogs, some people think, although I do have a little encouragement from the fact that the average weights were down almost 1.5 pounds last week. We have not on the cattle yet seen that week on week where we're starting to come down. We're starting to get a little of that in the hogs. So I'm a little bit encouraged, but my, oh my, is that market a wreck.
So was it wet in your neck of the woods like it was here over the weekend?
We, up in the northwest corner of Iowa where I sit, our crops look good. In fact, we might have even had a little more rain prior to this hot spell than some of the areas. I know I caught like a big inch just before, like about 4 or 5 days ago. The last one we didn't really catch a lot of, but certainly the crops here look pretty good. I did a little crop tour of my own last Wednesday. I had to go down to Des Moines and to Ames for some Iowa cattlemen's meetings. And so I kind of took a big loop through the western half of Iowa, and I was surprised from Ames all the way to like Kingsley, Remsen. The corn was real stressy looking, kind of that gray color rolled up. I'm a farmer too. I know it's not dead yet then, but it's to the point where I needed some rain. But that area did catch a little rain, a little more than expected over the weekend. And a customer of ours, told me he got 1.25 inches out of it. Will be a real game saver, right? Now, you've still got this Indiana, Ohio area that they've put some more percentage of chances of rain in for that area. And we'll see if it develops now. I'm struggling a little bit with what kind of an opinion I should be giving you on the corn. I mean, we're back to where we were pre-weather. That's almost exactly to the penny, December corn. And we're at a whopping 336.5. I'm looking up at my screen. I'm not looking away bored. I'm like going, okay, so it rains, so you got a big crop, so you got carryover. I get it. But we all kind of know that, and we're at 336. I've got kind of a conundrum. To me, the market is too weak to buy maybe, but it's too low for me to get excited about selling. And I'm not sure that this crop necessarily is home free just yet with the curtailing of the acres like the USDA had said. So as a user, I'd probably have a little interest in actually being a tick long.
All right, sounds good. What's the best way for folks to get a hold of you, Brad?
Hey, give us a call, 800-358-3047. Thanks again to have me on. I enjoyed it.
No problem. Brad Coyman has been joining us today. Just a reminder, commodity futures and options do involve a substantial risk of loss, and they're not suitable to all investors. That is the Fontenelle Final Bell being brought to you by Fontenelle Hybrids and all your local Fontenelle dealers. Check it out as a podcast at ruralradio.com, wherever you subscribe to your free podcast, and on Spotify as well. It's the Fontenelle Final Bell on the Rural Radio Network.